In this video, you will learn what an order block is, how fair value gaps combine with order blocks, why specificity matters when choosing OBs, and finally, a plan to start implementing them inside of your own trading. Now, before we get back inside of the video, I want to tell you guys that I am running a free giveaway of a prize worth $500 to my free Discord once we hit 1,000 members in our free community and at least 10 people inside of our VIP. To increase your odds, just make sure you're subscribed to our channel and that you leave a like or comment on one of our videos. Now, what is an order block? Order block essentially are just resting orders. If you use supply and demand, we're talking about the same thing essentially here. When we see this trade right here, we can see that we had this move start from right here in this area. Now, what happened after this move? A big extension downward. So where do we think the orders, like after this move happened that pushed price all the way down here, where would you expect the move to start from? The whole move started from this large candlestick right here. So this would be an OB. We like to see large volume followed by movement. Volume movement is very important inside of the markets because that shows us that participants are inside of the markets. We as retail traders don't push price. We are too little to push price. Only bigger participants and bigger players can move price. Now let me go on the charts here and show you guys some examples of an order block, because knowing theory is okay, but if I show you guys an example, you'll better understand what an order block actually is. On this chart, before I can point it out, where do you think our order blocks would be at? Well, for one, we have one right here. Price didn't fully respect it, but what do we see? We see that we had this last selling candlestick. We see a lot of bullish momentum come out, and then what do we see next? Price comes back to the zone, and then we see a little bit of buying pressure come out. Same thing here, but the opposite was selling. Look very carefully. The zone, we see large candlesticks, large selling candlesticks coming out of the zone. So what do we expect when price comes back? We see that price rejects immediately and then goes down. So the main thing when looking at OBs is momentum, and you always want to look for the last buying or selling candlestick before drawing your actual order block out. You don't just draw an order block like right here. No, you have to go to the last selling or buying candlestick. So if I am buying, I have to draw it from right here. And if I am selling, I have to draw it from right there. This is another example of an order block. We had this last selling candlestick that appeared, and then what happened? Price comes back and then keeps on going higher. Order blocks and supply and demand are essentially better when trading with the trend. You want to trade this system inside of trending markets. This is where you will see the most effective OBs respected inside of your favor. This right here, this zone, is another example of an order block. We had this last selling candlestick. Price came all the way back, and then now it rejects. It's very simple. It's just last selling candlestick, big push move down with momentum. Last buying candlestick, big push move up with momentum. Now that you guys know this, we can now stack confluences inside of it, because I hear a lot of people talk about SMC, supply and demand, even ICT as well, where they say the concepts themselves aren't effective. See, they aren't effective when you trade every single order block. Like, you might just trade, oh, let me just draw one right here. This is an OB over here. This is another OB over here. This is an order block. This is an order block too. See, doing that is then they're gambling. You have no edge. You have a little edge maybe if you're following the trend, but the real edge comes from specificity and combining it with other confluences that go hand in hand together so that you can get the best risk to reward with an okay win rate to become profitable in the long term. Just like my last point, this is what I just said. There are too many order blocks during a single session, during a single week, during a single month. You can find them on every single time frame. Just identifying one order block for your strategy is not good enough. You need other confluences so your trades are more effective. Now, one concept that I am going to explain for you inside of this video is a fair value gap combined with an order block. Fair value gaps essentially act as imbalances inside of the market. Combined with order blocks, they make order blocks honestly more probable. Now, this was the first strategy that I personally ever used when coming inside of the market. I learned it from my mentor at the time. So basically, when we look at this chart right here, what do we see? We see our order block. We have this last buying candlestick, and then we see selling momentum. But a very important thing is, where do you see a gap at? There's a gap right here. There's a gap right in this area after this buying candlestick had formed. Look very, very, very closely. I know when you first start using them, it's very hard to see, but over time, it gets easier. We see that as well when looking for gaps, fair value gaps combined with order blocks. We see that this candlestick did not wick back into the zone. This candlestick right here did not come back into the zone. So right here is the gap. There's an inefficiency inside of this whole entire move that the market more than likely wants to fill. Now, I know that might have sounded confusing, so we're gonna go to the charts now and go over a lot of examples so that you guys can start seeing this every single day inside of the markets. All right, so we have our main order blocks, our main supply and demand on this trade. One thing though that I'm gonna say is that when we are looking for order blocks in general, we are going for the higher time frame trend. We always go for the higher time frame trend. I don't do counter trend trades inside of my strategy. You can, but you have to go for less risk to reward, or you have to go to the lower time frames and be in and out, because a lot of the times like OBs get disrespected when we're going against the trend. Anyways, this trade right here, this was on NQ on Tuesday. What do we notice? This OB had a gap. Why? Let me take it all the way back for you. When this order block was forming, this candlestick right here did not wake back into the zone and fill in this candlestick. So right now, there is that inefficiency inside of the market. And more than likely, it will come back and tap into that inefficiency before moving higher. We also see that this move, like a lot of our other moves, has a lot of momentum, like we like to see. Now, when price comes back to this move now, what do we see? We fill in fully all of these gaps. We fill it in fully before then taking off. But we do go back down a little, but we ended up taking off and respecting this order block. So if that is an order block with a gap, what isn't? Let me show you guys an example of that now. This is not an order block with a gap. So I'm not taking this trade personally. This trade did break structure. It is an OB. We did have that last selling candlestick before going higher. But we go back here, what do we see? We saw that when this OB was created, we see that we created no gap. There is no gap here. Price filled in all of these areas. So inside of this zone where the last selling candlestick was at, there was no inefficiency. There was no fair value gap formed. So to me, it's a lower probability trade. This would be an example of no gap. Even up here is an example of a trade with a gap. Now let's go to this day that just happened. This would be an example of an bullish order block with a gap. We saw that coming out of the zone, this candlestick did not wick back down. So this is now a bullish order block and an OB that I would take. But I need my other confluences as well. A lot of other confluences before even thinking about taking a trade. I wouldn't even have taken a trade like this, but it is an example of a bullish order block. Now, like I said, these order blocks with fair value gaps and inefficiencies aren't just on the lower time frames. They go all the way up to the higher time frames, and even more so, the more higher time frame you go, the more likely these trades are to play out. So let's look at a day like this where we had this order block all the way here. Price comes in and taps it all the way on Wednesday before price just runs up. So the more higher time frame you go, like the 1 hour and the 4 hour, the more these trades are more than likely going to respect. Honestly, that's something I wish somebody had told me when I first started. I mean, my mentor did talk about it, but I didn't really listen properly because more than likely higher time frame zones have more resting orders inside of them than lower time frame order blocks, lower time frame zones. That's why a lot of people, when you first start off trading, you get stuck on the lower time frames thinking that you can try to catch every move. Essentially, a very skilled trader can trade maybe the 1 minute and the 1 minute only. I've seen it before, but when first starting out, the 1 minute just looks like noise. When you have that higher time frame perspective from the 1 hour, from the 4 hour, you can hop back down on the lower time frames and take a way better trade with very good risk to reward. But anyways, we see this OB on the 1 hour. What do we see? We see that it had this last selling candlestick before pushing higher. And then we see that price comes back many days later. And then we see it fill in this whole entire inefficiency that price had created before running and moving higher. Now, I want you to start identifying order blocks, just like I've been doing. On the 15-minute time frame or higher every day, look for OBs during the session that you trade. Mark them off and wait to see if the market pulls back and fills them in. And then, like I always say, always make sure that you are with the higher time frame trend. So that is essentially it for this video. This video was just an introduction, a basic level surface introduction into what order blocks are and how you can start seeing them on the charts. I'll create another full order block trading plan later on that goes over every single thing that you need to know to create an actual system out of this and become consistently profitable. So that's it for this video. If you guys liked, make sure to comment and also subscribe as well, because I'm posting videos not just only every week now, but almost every single day. That's it for this video, and I'll see you guys next time.